All right, hey, ladies and gentlemen. All right, this is Terence time coming live to all of you yet again for another Portfolio Friday on Facebook Live with I'm Possible Terence. Now, so I hope all of you are raring to go because today I'm actually going to position into our portfolio. All right, so yes, I did say in my post it is Jackson Hole. All right, it's the once a year Fed meeting. All right, for great significance. But I'm also going to say this, right? Nothing's going to come out of it, right? The magician, right, is going to weave his magic again to try to diffuse, right, or put a ring around everything, right, and make it seem like everything is going to be okay, right? But further down the month, right, we know and we expect, right, another interest rate hike. What we do not know, all right, is the magnitude of the next hike. Is it going to be 0.5? Is it going to be 0.75? The market is basically still undecided. All right, so moving forward with moving forward with the upcoming economic numbers, right, it's going to continue to impact the markets, all right, and I do believe, all right, that we're going to finish August strongly, all right, and setting up for a corrective month in September. All right. Why? Because if we correct in September and October, right, it will give a chance for the year-end rally to actually still pay out. Right. But if we continue to rally into September and October, right, there is very little room or gas left in the tank, right, to still push on for a year-end rally. All right. So if you think that if you think that all this does make sense, right, then you need to start positioning your portfolio, right, just in case, right, it actually turns around and it actually happens, right, because we did enjoy a good month, all right. August was a good month for the portfolio, right. We expected some corrective move, but it never ever happened and it never ever came. All right. So now we have to be more wary, right, of our next positions moving forward. All right. So hello everyone, and hello Raymond, hello Eileen. All right. So anyone else who's in our session, all right, please drop a note, please say hello. All right. Now, if you see the banner over there, if you're joining us for the first time, right, you would probably appear as Facebook user if you leave a comment. All right. So if you don't want to do so, please go to streamyard.com/Facebook. All right. And you'll see a Facebook button over there. Just click on it. It will approve your profile. All right. And what happens is after that, all right, when you leave a comment, we can actually see, all right, who's leaving the comment over here. All right. Hi, Shuteng, who's joining us from YouTube. All right. So, yes, apologies. All right. So, yes, we are streaming this on YouTube as well. So, if you go ahead, you can find us on YouTube via our channel. All right, and you can also like or subscribe to the page so you'll be getting updates, right, whenever we post up any contents. All right, hello Alex and hello Susan. All right, now so let me take off the banner over here. All right, and yes, as a disclaimer before I start today's session, right, I do intend to talk about some live trades that I put in my own accounts. All right, I have zoomed in some additional cash flows because we're still a little bit short, all right, of our September target. So I'm going to continue to allocate because I find good reasons to do so. All right, and I'll be talking about it, but please be aware that all forms of investments, all forms of trading bears a risk of loss. So you need to be very clear of the strategies I'm adopting, right, during this session before making any decisions at all, right, to try to follow, right, any of these trades in your own live accounts. Okay, all right. So whatever I do here is really for educational purposes, is to show all of you that a simple portfolio can actually be built, all right, on your own, right, in a very simple laid-off manner way. All right, and still achieve a 20% return on a year-on-year basis. All right, so I've done that for the first year. All right, we were close enough. All right, and right now starting a new portfolio. All right, since the month of May. All right, over the last 1, 2, 3, 4. All right, the last 4 months itself, we have achieved our cash flow target goal of $2,000 per month. All right, in fact, we've done better than that. All right, in the month of May, we hit 2,294, so we did a little bit better. All right, and then in the month of June, we did 2,218, so we outperformed as well. All right, and followed by $2,000 in the month of July. All right, and then followed by 3,458, right, in the month of August. So I did say that August was a good month, even for our portfolio. Right, so that sets our portfolio at $109,984. All right, now what does that mean? Right, it means that for our model portfolio over here, all right, we're close to about 10% return, right, only in the last 4 months. Right, so we are way ahead of our schedule over here. Right, because our goal over here is to not only achieve 20% per annum, right, but also to achieve a $2,000 cash flow, right, on a capital base. All right, so if we do that, all right, we are right on course. All right, now, so without further ado, okay, what is our position right now and how are we going to allocate? Now, we did have a GPS position, right, which was a covered call position that expired last week. All right, and all right, the market actually closed above $10. So my GPS shares were assigned, sorry, my GPS shares were actually assigned and taken away from my accounts. All right, so here you see me recording it. All right, my out price for the stock is also $10 because that's the call options, right? So I didn't lose any money on the stock. I didn't make anything as well, right? But we did lock in some cash flow worth 34 cents or $170 for 5 options. All right, so that was our cash flow gain for the month of August. All right, now, so that position is out, all right, and that would elevate, right, $5,000 in our capital base. So right now, all right, our capital allocated on our account is actually $92,700. So based on our most updated portfolio size, right, we are actually allocated to the tune of 84%. Right, so this may surprise some of you. Terence, the market has already gone up so much, right? Aren't you afraid it's going to come down? Right now, this is a portfolio built for investment purposes. All right, so we do not trade it like we're going in and out all the time. No. All right, so I take on strictly, all right, positions with longer term outlook, right, but trying to generate cash flow on a shorter term basis. Right, so it makes my portfolio management really simple. Right, it also makes it very laid off. Right, and right, I focus on fundamentals first, right, and then a little bit of technicals, right, to add in, right, for the best entry. Yeah, okay, right, but ultimately our goal is the cash flow target. So right now, for the month of September, right, based on our current open positions, right, we have collected 1,600, right, and 84 US dollars. Now, let me make sure the sales are correct. Yes, right, so everything within the month of September, right, so now, right, we are at 1,684, ladies and gentlemen, right, so I am still about $400 shy of our cash flow target and our cash flow goals. So let's continue to try to allocate, right? And let's see if we can bring it closer, all right? Okay, so that we can get there, yeah? All right, now, so my banner is off, so I'm doing fine. All right, hi, Mei Ling. All right, and yes, let's go, ladies and gentlemen. All right, now, so without further ado, let me first provide all of you, as usual, all right, a case of usual market updates. All right, so let's go to our SPY. All right, so ladies and gentlemen, this is our SPY counter that we use as a representation for the markets. Right now, so for those of you who are unaware, right, the SPY is actually the S&P 500 ETF share. Right now, so we're using this as a comparison for the markets, right, and all of you can see what's happening today. Right now, we get an attempt to break the resistance yesterday, right, but today we are back down. Right, so we're back down over here, all right, and we're to the tune of 70 points, ladies and gentlemen. All right, we got a fake out yesterday. All right, as you see over here, we got a fake out, all right, and today we're selling it back down. All right, and today is actually much more severe than yesterday. All right, so if you look at this right now, all right, we do have, right, and kind of like, I'm not sure if I'm right because I'm not too strong a technician, right, but I do know that this is definitely swallowing up whatever happened yesterday. Right now, in that case, right, from a psychological standpoint, all right, today's movement is actually erasing, right, anything at all that yesterday did, right? So definitely, right, today's move is going to be bearish. So if it stays this way, right, it actually doesn't bode well for what's to come, right, in the market next week, right? So that's something you got to be very aware about, right, and something you got to be very careful as well, right? Now, so that's definitely how I'm going to play it, all right? There's a lot more risk on the downside, right, versus a potential upside risk. Yeah, okay, so that's how you need to be aware of, right? Because we do have a resistance over here. There is at 417, right? Which means about 4,170. So even if we stretch it close enough, right? If the market doesn't break back above 4,200 level, right? Okay, the tune right now is still better on the downside. Yeah, okay, we have more downside risk, right, as compared to the upside potential. Yeah, right now. So with that out of the way, all right, let's check in on our positions. Right, and after that, all right, let's continue to allocate. All right, now, so let me bring our portfolio up. All right, so this is our portfolio, all right, and definitely there have been some positions that we do not touch. All right, why? Because the first one, all right, is our WBA stock position. All right, so our stocks cost us $45, right, and right now it's sitting at 36.36. So we can't do anything, right? But just continue to hold the stock, right? But as we hold the stock, right, do not forget, right, that these stocks are dividend-paying stocks, right? And we have a dividend payment that was paid out on the 18th of August, right? So for 500 shares, I actually collected close to $200 in cash flow. Right now, since we are, not non-US citizens, right, we do have and we are subjected to a withholding tax of about 30%, right? But that still nets me, right, about over $100 and a little bit more in terms of cash flow. Am I going to record it? No, I'm not, right? You didn't see me record any dividend income in the month of August, right? Because for my portfolio, all I care about is premium incomes. Any dividend that I collect along the way are just subjected to bonuses. Right, I treat them as a bonus from the market, so I say thank you very much. Right now, so it's just part and parcel of how I build my portfolio. Right, are there perks? These are probably what you call the perks. Right now, so I did collect some dividends over here, right? But I can't sell a call because if you look at it, right, even if I go all the way to October, right, for a 45 strike call option, it's only paying me what, $7? Right, I'm not going to take that chance. Right, I'd rather wait for the stock to have a chance to bounce up. Yeah, right, because the valuation, if you look, is really depressed, right? And recently, because of the fine that he has to suffer because of the opioid, fiasco, right? Now, so it's been punished, right? All bad news has been out on this company, right? And the punishment is a fine, right, via installments, which doesn't affect the cash flow of this company, all right? So they're more than capable of meeting the dividend requirements, all right? Okay, and these kind of events, right, will not happen again. Right, so we do admit, right, it's probably a corporate negligence when it comes to this aspect, right? But it's not only them; it was also Walmart as well. All right, now, so as long as they can sustain it, all right, it's not a problem, right? Why? Because we have looked at companies like Altria as well, right? Altria is the holding company of Philip Morris. How many major lawsuits have they lost over the years, right, and paid out in billions of dollars? Have they survived? And have they still done really well? They have, all right? So as long as it doesn't affect their cash flow, right, or the dividend policy, I think all is fine. Yeah, right. We just need for the market to realize what value is. Yes, the market has forgotten what value looks like. All right. So once they find what value is, right, we'll quickly see a bounce, right, in this stock over here. Right now, why? Why am I so adamant on that? Because I can only tell you this. This is not the first time, right, that it has happened on Walgreen Boots. Right. So whether we like it or not, this is not the first time, right, it's happened on Walgreen Boots. Now, so if I were to go back 10 years, right, you will be able to see this. Right, so Walgreen Boots has ever traded around $30 price level, right, and it did bounce up all the way to 90. Look, right, it was once all the way to 90, right, and then it did came back down to 30 again, right, sometime around the period of 2020, right, and then it did bounce up to 50, and now we're back here again. Yeah, right. Okay, now so I'm never too worried because now we're definitely at the lower end of the price range that we see. Right, so it's severely depressed, right? And if you look at it, the company has always shown capability of generating profits. Yeah, okay, so it's never fearing. You should never fear when you're buying a company that has always been capable of making money. All right, okay, you don't have to worry, right, if it's going to go anywhere near what we call the bankruptcy risk, right? So that's a fear that I don't have to worry about. Yeah, and if you look at it, ladies and gentlemen, right, it even has a book value of $30. Right. Okay. So we are not really overpaying for this company, right? Even if we tear it apart, right? Now it's not going to happen even because the company is making money, right? If you look at it, right, it's consistently made, right? $3.74, $3.78, $4.92, $4.31, 52 cents because of COVID, all right? Okay, and then $2.93, right? It's slated to make $6 this year, all right? No worries at all, right? It's just when the market wants to wake up, right, and actually realize, right, how valuable this company actually is, right? On top of the fact that it's paying what, a 5% dividend return, right? If I don't have a position right now, I'll still initiate a position, right? It's good, yeah, right now. So without further ado, I hope I, kind of quash some of your fears because I do know some of you are worried about this company, right? Now, next one we have is Intel, right? So what about Intel? The same conditions as what I just explained when it comes to WBA. Right, we hold the stock at 42.50. Right, we did get a bounce last month. Right, we did get a bounce sometime last month, and we sold a 42.50 call, collected some premiums. Right, but we can't do so now. Right, it's definitely at the bottom of the wave. All right, so we just got to wait for it to bounce again. All right, so same thing as well. Intel is something that something like Intel is capable of doing exactly what I said WBA would do. All right, and it's never fall shy of generating a profit. So on that end, I don't have anything to worry about. Right, so these are our two longer term positions that we have held for some time now. All right, and Intel has also paid a dividend, all right, in August, 4th of August. Right, it's paid out 36.5 cents. Right, we own about 500 shares as well. So we collected also around $150. Right, all that. All right, now next up, right, our first option position to talk about, we have an ANF, all right, 16 September, right, portfolio puts with an 18 strike, right? We collected 120 for it, all right? Let's see what has happened, all right? So ANF, all right, now it's fallen today, all right, and it is also after earnings, all right? So looky look, right? Its earnings came out, all right, and it looks like ANF is following the footsteps of Gap, all right? It's following the footsteps of Gap, all right? It's struggling a little bit, right? But this company that's made money for a really, really long time, right? It's shown consistency as well. If you look over here, right? Good consistency of generating profits. So we have 2 quarters of a hiccup, right? Sorry. So I'm not going to worry about this position just yet. Okay, just yet, right? I'm not too worried about it yet, right? It's still spotting a PE of 5 right now, but this company has a little bit that's how do we say this? A little bit falling shy of what we have in Intel and WBA, right? On the fact that this company doesn't offer dividends. Yeah, okay, so I'm purely trading, all right, on its capability of generating profits. For now, right, I'm still comfortable with it, right? So I'm holding the position, right, because I can close it, right? 18 puts, yes, all right, 18 puts right now are worth about 185. Right, 185. So I'm a little bit under the water, right? So I'm going to hold it. All right, we have about another 4 weeks to go, right? So I'm sticking with the position. Right now, next one, VZ, right? We paid $50 for it, ladies and gentlemen. Right, so with $43, obviously I can't do anything. Yeah, all right. Obviously I can't do anything. All right, look, looky look, 50 puts. Can I make anything at all? $1. You want $1? I'd rather wait. All right, okay, so we leave that position alone. All right, now, so our next one, AT&T, $18 puts for September. All right, 41 cents. We are close enough to 18. How much does it cost now? 36 cents. No profits to talk about, so we continue to hold this position. Right, no actions. All right, our last week's position, KSS. All right, so last week we sold, last week we sold a 16 September $30 puts and collected a 206. Now let's see what it's worth today. All right, KSS. All right, we sold it. All right, let's move it up. Oh man, did I just spoil something? Ah man. Yeah, this is good. All right, now, so we move KSS up over here and we have a $30 puts. Right, it's worth about let's make it 190. Right, so it's worth about 190. Yes, it's sitting on a profit. That's a good thing. All right, but I'll continue to hold. All right, I like the valuation. Right, the company is trading below 6 PE and we're sporting a 6% dividend yield. That's good. It's yummy. All right, now it's even delivered a strong profit again, 111. All right, 111. All right, not the best, but it's decent enough. All right, so it shows the capability of making money. So I'm not too worried. Yeah. All right, now, so our last position, TSN. We sold this last week. 77.50 puts for October, 149. Let's take a look. 77.50 puts for October, 190. Let's price it at 190. All right, and let's move it up. Yeah, here. All right, 190. Oh, we're under the water, but it's fine. All right, we've got lots of time all the way to October. All right, now, so let's position in, shall we? All right, now this week, I'm going fishing again. All right, so what am I fishing for, ladies and gentlemen? All right, let me first add it up. It's going to be position 20. All right, now, what stock is it going to be? All right, let me keep it as a suspense first. All right, now, and today is what? 26th of October. All right, so I'm going to allocate. Let's see how much cash flow we can generate. All right, today, I'm going with commodity, ladies and gentlemen. I'm going to position in some strong commodity stocks inside our accounts. All right, so I will be doing this, and let's go to gold. All right, so I'm selling gold. All right, okay, not gold, all right, but a company that deals with gold, and the stock symbol is gold. All right, okay, today we're going to go with Barrick Gold. All right, one of the biggest gold mining companies. right? Barack Gold, all right? 5% dividend return, all right? Okay, 5% dividend return, that's good, right? And if you look at its charts, right, I'm showing you the weekly chart even, right? Can you see we are really at the depressed valuation, right, over the last 3 years on this stock, right? And with inflation being rampant right now and recession being in place, right, I do see that commodity prices will stay strong, right, for a long time, right? So I'm going to position in on this stock with such low valuations. All right, now, so let's go. All right, now, and I'm going to go with an October puts, all right? I'm going to deal with the 15, all right? Okay, so I'm going to sell the 15 October puts over here, all right? So let's go with it. All right, Andy, all right? Now, you would realize that while I do have full respects for Mr. Buffett over here, all right, but I can't follow the way he trades because he trades a different magnitude, right, from how I trade, all right? So I'm going to follow what my needs are, right, and what my valuation matrix are as well, right, at point of time to time. All right, now, so I'm going to position in on this one over here. All right, so this being a commodity, let's take a 3 option contract position. All right, so I'm going to take a smaller quantity size because of the commodity related risk. All right, and let's go with done. We're done. Give me a minute. All right, here we are, ladies and gentlemen. All right, now, so we are filled on gold over here. All right, I just did it, 21.53. That's the clock on the platform. All right, gold, October 21, $15 puts. I sold 3 options over here for 55 cents. All right, so that's filled. That's done, all right, on my official portfolio accounts. All right, so let's fill this up. All right, I did 3 option contracts, GOLD. All right, that's for 21st of October, a $15 puts, right, for 55 cents. Right now, so that pays me a cash flow, right, of just $82.50. Why? Because I sold 3, bringing a total of about 160 odd in terms of total cash flow. But this only expires on the 21st of October. So I'm going to allocate half of that cash flow, right, into the month of September, right, and the other half, right, into the month of October. All right, so that's how I'm going to treat it. All right, now, so let me also copy that down, right, and put it into the month of October. All right, so 82.50 for September and 82.50 for October. All right, but of course, right, margin wise, right, I'm only going to need to allocate one time around. All right, now, so that's done. All right, we have a little bit of position in gold, right? As you realize, it's not too hefty. All right, so I'm more than happy to do it. All right, now, so thank you, Susan. All right, so you can obviously see why, right, Buffett decided, all right, to make a decision if he wants to pull the plug and cut his losses. Maybe just because he feels, right, that his money, right, can be better used somewhere else, right? He may cut a company, right, not because the company is going to collapse, but just because he don't see much upside on the company. But when I'm selling portfolio puts, you must realize the strategy is a little bit different. I don't intend to buy the stock, but I just don't want the stock to crash. So if you look at what has happened to Barack just now, right, if I show you on charts, I really see very little reasons, right, amidst the current economic climate, right, for gold prices to really collapse. In fact, I do see gold prices going higher, right? If gold prices go higher, gold stocks will also bounce down, right? So I really have very little worry about gold stocks falling off, right? And Barack Gold, right, is offering a 5% dividend return, right? So I think it's pretty yummy. Right, if I look at the charts over here as well, over the last 3 years, right, Barack Gold has delivered consistent profits, right? Nothing exceptional, right, but something that is very, very consistent. Yeah, all right. So I like what I see, right? It is what I see. Yeah. All right. Now, so let's go on with the next one. All right. I'm not done allocating. Don't worry. All right. There's more to come. All right. Our next position is going to be retail. All right. It's going to be retail, ladies and gentlemen. I'm going with Haynes. All right. Haynes Brands. All right, now, so Haynes Brands has missed its earnings recently. Did it miss its earnings, actually? All right, yes, it missed it by a little bit. All right, and the stock has been punished lower. All right, I like what I see again. Why? Because we have a company that's punished well over 50%. Right, and, okay, if we really look, right, over the last 3 years, right, look. All right, okay, now, so the profits are not exactly exceptional. All right, okay, but, all right, it's doing fine. is still generating profits. Yeah, okay, and company's paying a 6% dividend yield, right? 6% dividend yield, 7 PE, right? I like the depressed valuations, right? And company is what? $9, right? As long as it doesn't go bankrupt, how much can it really fall, right? I do like some of the brands that I see over here, right? Of course, Haynes is something that we all grew up with, and unfortunately, if you don't know Haynes, then you don't belong in my age group then. Yeah, okay, all right. But they also have something along the lines of Champion, right? Champion is something that's still definitely very, very popular right now. And this actually surprised me. I didn't actually know that this company is the one that owns Polo Ralph Lauren as well. All right, so that's something like a new thing for me. All right, but I like what I see. All right, and yes. All right, any other brands over here? All right, not that I know of as a guy, obviously. Right, but I do like his capability of generating profits. So yes, all right, I do like to go with it, right? And I'm taking a position. So let's see, it's been punished, right? And if we look at the recent low, we are at the recent low. So we are at the low over here. So we can take advantage of it. All right, so let's do a $9 puts. All right, I think it's bad enough. Right. $9 puts for October. Ah, man, it's not taking me. The last is 49. It trades at 5-cent intervals. Let's take a chance. Let's see what happens. Yes, it does happen. Right, I actually sent an order for 45, right? But the market filled me at 49, so that's better. All right, now, so I sent an order for 45, but my fill came back, right? 2158, the current clock time, right? I sold 4, right, of the Haynes October $9 puts, right, for 49 cents, right? So that's the trade I locked in over here. All right, so let's go allocate. All right, 31. All right, HBI. All right, $9 puts. Right, 49 cents. Right, and I did 4 for this one. All right, 4 for this one. So that's close to $100 per month. Right, $100 per month, and we're inching closer. We are $150 shy. Oh man! All right, we're so near yet so far. All right, we're $150 shy. All right, of our goal this month. All right, I've got about another 4 weeks to allocate. Let's have a look. Looky. Can I allocate more? Let's go. Let's take it. Let's take Pfizer. All right, I think Pfizer's right for the taking. All right, now, so let's take Pfizer. Do I have for September? Yep, I think Pfizer for September. Let's do a September for just 44 cents over here. I think it's good enough. All right, I'm going to take 3 of these Pfizers. All right, I think I'm there. All right, September 16, the $45 puts on Pfizer. All right, I'm going to take 3 of them over here. All right, and they're going to pay me how much? 45. Let's gun for it. Give it to me. Give me. Come on. Oh man, it doesn't want to give it to me. I'm gonna give in. I'm gonna give in. All right, now, so it's just 1 cent. All right, so nothing too major. All right, let's go. All right, so we're here, ladies and gentlemen. All right, PFE, three options over here. The $45 puts for September 16, all right, at 44 cents. Now, I believe we are close enough, really, really close. All right, I'm not gonna haggle, niggle for like a couple of dollars. All right, but trade 32 PFE in September, $45 for 4. Yes, I did 3. All right, and nope, I don't need to halve the cash flow because I'm doing it for September. So that's 132. We are 1996.5. All right, now I definitely believe I can squeeze out another $5 before September expiry. Right, somewhere along the way, I'm sure I can squeeze them out. Yeah, all right, now so I'm not too worried. Okay, I don't want to position anymore today. All right, so let's look at our capital requirement. Right, I am now at, oh man, I overspent. That's okay. Oh no, I didn't. This is 0. All right, 107, 109. I'm fully allocated. All right, so I'm fully allocated, ladies and gentlemen. All right, so I've not busted my budget yet. Okay, not yet. Is this correct? Yes, it is. All right, so I've not busted my budget, and we are at, all right, our September cash flow goal. All right, okay, now, so that's it. All right, now, and shooting, right, I have earned more than $2,000 in the previous month. All right, so it's still good. All right, September is slightly below. I agree with that. All right, I agree with that, but I am actually comfortable with the positions I loaded today, so I don't mind. All right, and that's also why I say if I'm shy of a couple of dollars, I'm just going to leave it as this. Yeah, all right, now I'm not going to push for it, but if there's something worth taking, I will still take it. I'm hungry. I'm always hungry. After 10 years, I'm still hungry. All right, now, so we are allocated. All right, we are done. All right, and we did hit close enough the cash flow target for the month of September. All right, but let's also calculate, right, how are we, right, for the following month ahead. Right, we are at 329.50, right, for the month of October. So we are hitting about 1/5. Yeah, about 1/5 of our October goals as well. Right, see the flexibility in terms of the portfolio I'm building. Right, it allows me to go after my goals. Right, but it allows also for me to plan it out. Right, and how I want to go about achieving this. All right, now, so I think I'm done. All right, I'm done for this week over here. All right, we are already close enough to our September goals. All right, and oh, Facebook user. All right, again, all right, you're probably new with us. That's why you're labeled as a Facebook user. All right, so do go to the link, streamyard.com/Facebook, all right, and approve your profile. All right, but the simple answer, all right, because you haven't joined us for many sessions, all right, is this. Do you see that this trade, all right, is actually a replicate of this trade? Yeah, do you see this trade is a replicate of this one, right? And this one is a replicate of this one. So it's actually the same trade, all right? Now, but I'm splitting the total cash flow, right? If you look at my formula, I'm splitting the total cash flow into 2, right? I'm recognizing half of the cash flow for the first month and half of the cash flow for the second month, because this option expiry actually trades over the next 2 months. Is that clear enough explanation for you? All right, it'd be great if you can drop a comment. Yeah, all right. All right, selling put gap again since the stock is taken out. Mike, all right, I'm not too sure. Oh, yes, Mike. You got me a little bit puzzled over there. Selling put options with a gap. I thought that was what you're trying to say. Yes, I did consider that, Mike. I did, all right, but I actually like HBI. I like Haynes Brands a little bit better than Gap. All right, now for one simple reason, right, is this. Because if we look at Haynes Brands, right, its earnings has already passed for quite some time, right, and yet the stock is taken lower, right? So I like the severe depressed valuations, right? Where else for Gap, right, its earnings only just came out, right, the last couple of days, about 2 days ago. All right, okay, now, so I don't know where it's going to hit. It may actually hit a little bit lower further. All right, so I just feel that this week is a little bit too early, right, to position back into Gap because we just got out. Yeah, okay, I just feel that it's a little bit early. But if Gap stabilizes over the next few weeks, right, I will think about coming back to this one for more cash flow. Yeah, Mike? All right, so that's how I see it. Right, there's always a reason, right? So of course, you asked, so I answered. Now, so I'm going to end this session over here. Thank you very much, ladies and gentlemen. There are more than 100 of you, I do believe. All right, you can give me a few more likes. Oh man. All right, okay, you can afford to give me a few more likes, all right, and a few more shares before I end off the session, okay? All right, but definitely, if you like what I'm sharing over here, please make sure you do come back, all right, next week, all right, and join me for another live session, all right? So week to week, we track the performance of the portfolio, we see if we can close trades, right, and then reopen, right, for further cash flows. It's Jackson Hole, ladies and gentlemen. Let's see what the Fed is going to announce. Let's see what Mr. Powell, all right, is going to power up, all right, and then we act from there. All right, so have a great weekend, ladies and gentlemen. All right, and I'll see all of you really, really soon once again, okay? All right, I hope you enjoyed the session. Bye-bye for now. Good night.